All right, guys, in the next video, we are going to be talking about confluences. So confluences are really what makes the IFVG model so strong. You can take every single IFVG in the New York session and you will probably be red. That is not what makes the model strong. You know, IFVGs are going to fail, they're going to win. What makes it so strong and makes the win rate so good is when you pair an IFVG with 3 to 4 confluences. Now your bias is so strong, your conviction is so strong, the play is going to work. You understand what I'm saying? So we're going to go over all my confluences one by one, what I look for them, and all of that. So liquidity sweeps, we've already talked about it in the previous video. Go back and watch that one. Now we're going to talk about SMT. Okay, so let's use my Twitter. Here is, let me find an SMT trade. Had an SMT trade right here. Yeah, so here's an SMT trade. Here's SMT. SMT is the idea that ES and NQ correlate each other, right? The NASDAQ and the S&P. They are different, but they move pretty much the same. So theoretically speaking, when one sweeps a high, the other one should sweep the same exact high. They should follow each other. When that does not happen, that is SMT. That is a hint that the market's telling you that we could possibly be going a certain direction. Okay. So in this example, you have this red line right here. This is a level. This is London high. So as you can see in this example, on ES, we go up, we take out London high on ES, but NQ at the same exact time does not take out London high. That is a bearish SMT. Okay. You see that NQ is weaker than ES, right? You see that NQ is weaker than ES because ES went all the way up here to take it out, but NQ wasn't strong enough to go all the way up there and take it out. Now you compare that major liquidity sweep, that London sweep I talked about in the previous video, with that bearish SMT to now find a bearish IFVG setup to short. And that's exactly what we did right here. I would have taken this play on NQ, but there were no good gaps at the time. So I took it on ES. As you could see, we entered on the close on ES, and this thing dumped all the way down to Asia low. And it's all started with the sweep and then the bearish SMT, which the market gave me a hint that NQ is not strong enough to take out this high. We're about to dump. So that's just one example. If I could find another one, I'll show you. What is that? Doesn't look like a... Here's another one. Same deal. We have London low, level marked out. ES comes down, takes out London low. Same exact time. NQ comes out, cannot take London low. And then that is a bullish SMT, right? Because NQ is not weak enough to take out that low. It's stronger than ES. Now, if you pair that SMT with the major liquidity sweep, you find an inversion right here. You enter on the close over and you target opposing liquidity on the other side. It is so, so, so powerful. Now, you don't need an SMT for these reversals to work. It's just an added confluence, okay? The next thing we'll go over is momentum and reactions. I'm going to go over it briefly because we did touch up on this in the liquidity video, but there's just differences, man. A play like this, let's see. So a play like this where we have a data low sweep and then we're looking for the reversal and this thing chops for like 5 to 10 minutes versus this where we come up, we take out the 4-hour high and we dump instantly into the IFVG. This has a way higher win rate than this. Okay. You understand what I'm saying? I don't know why that's up there, but you understand what I'm saying? So yes, plays can still work if it delays and it chops like this, but I wouldn't put as much money, I wouldn't risk as much, and I wouldn't be as confident is what I'm saying. So momentum and reactions, the reactions to the liquidity sweep and momentum through the gap are very, very important when determining if I should take this or not, if I should go heavy, if I should go light, all of that stuff. So you need to look at that very carefully. And the next thing is draw on liquidity. When you take an IFVG setup, what are you aiming for? Okay, I'm going to try to find an example here. I mean, this is an example. I want to try to see if we have equal lows. this would be equal lows right here. So this would be equal lows right here. You can't see it, but where my cursor is, this low and this low are equal. So if you have a short setup, if you pair the liquidity sweep with the good reactions and good momentums, you get the close under, and you're targeting equal lows, you're targeting a strong level, you know, such as one of those significant liquidity areas I talked about in the previous video, much higher win rate. Price is going to want to gravitate towards those levels and take that area out, versus if you were just a short and there's nothing really in that direction to take out. You know, you're not giving price a reason to go into that area. You're kind of just hoping for a reversal. So that's definitely something else that's really important. When I'm taking a long, I'm going to try to look for, like, this isn't that strong. Yes, this worked, but these are just swing highs, right? TP1 is a normal swing high, same with 2 and 3. Whereas something like this, now if I take an IFEG short, what am I really aiming for? The final TP here is low of day. As I talked about in the previous video, that is a significant area of liquidity. So that would be an added confluence if you ever take a setup like this and you see that one of your trims is a strong magnet like that. Last but not least, we have premium and discount. I will go over premium and discount very carefully, but I have a daily bias video coming in the course. Essentially, premium and discount is the idea that if you wake up every morning at 9:30, okay, if you wake up every morning at 9:30, you draw a box, right? The market opens at 6 p.m. the previous day to current price at 9:30 in the morning. So if you draw a box from the lowest point to the highest point, you see right here is the highest point, and I extend this the whole day, this is your daily range, because this is the low of the whole day so far, and this is the high of the day so far, okay? Everything else is the range. Now, the middle is your 50% of the range, this dashed line. The idea is that whether you're in an uptrend or whether you're in a downtrend, price will eventually come and rebalance itself at 50% of the range, no matter what, okay? So if you want good value, if you want to have a high win rate with good risk to reward, the idea is that you want to short at the top end of the range back down to 50%, and you want to long at the bottom end of the range to 50%. And that will give you good value. It'll keep you on the right side of the market, and it'll give you good risk to reward, okay? So that's another thing. That's another confluence. If we have a major liquidity sweep right here, you see we swept, let me go to it. You see right here, we swept London, right? You see we swept London right here. If you could find a short setup up in this area, it's an extra confluence because you are high up in the premium range and you'd be shorting back down to 50%. And potentially even discount if this thing decided to dump. So that would be good value for premium and discount. Whereas if you were to just be at the top end of the range up here and you were looking for longs, you're longing in deep premiums, you probably already missed most of the bullish move, and it's just not good value. More times than not, you're gonna see that you're just gonna try to catch the bullish trend after it's already happened, and you're gonna lose. So that's another one of my major confluences, but like I said, I'm going to have examples in a later video. So those are all my confluences, guys. Again, you can add your own confluences. You don't have to use these confluences, but these are really... Where did the confluences go, actually? Am I tripping here? Yeah, I'm tripping here, but yeah. So the major confluences, again, that was from the previous video. Major confluence, again, is liquidity sweeps, SMT, momentum and reactions, premium and discount, and draw on liquidity. So once we get our major liquidity sweep, this is pretty much what I look for before deciding to enter with an IFEG setup. If you have 3 or 4 of these present at a single moment and you have a good IFEG, you're going to have a very, very high win rate. So that's pretty much it for me, guys. Let me know if you have any other questions, and I'm going to get to this next video in a second.